Okay, with that
probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Hey, good day, everybody. Mike, can you still hear me?
I can still hear you loud and clear.
Great. Hey, folks, last week we exposed the real challenges that traders face. We got started on a 4-part episode where we're going to be digging into just challenges, because we want to help. Mike and I both want to help people avoid the landmines that we experienced when we first started trading. Where's my camera? There it is right there. Mm-hmm. And so because every trader, no matter their experience level battles with 5 different challenges that we're going to be addressing today, it makes success feel absolutely impossible. And if you've ever felt like you're spinning your wheels in the market, this episode is for you. So stick around, because next week we're going to be covering the 7 deadly sins of trading that ruins account. So, but before you get all amped up about next week, hi, I'm Dennis Wilburn. I'm the autopilot trader, and joining me is Mike Lamoth. Mike,
hi, Dennis. Yeah.
Let everybody know what you do.
For anybody that doesn't know who I am, my name is Mike Lamont. I wrote a few books. One of them is The Trading Mind Wheel. Blessed to have Mark Minervini write the forward to that one. And I'm somebody that started trading maybe about 25 years ago, got kicked in the teeth for the first 10, figured out a way to make it work, and decided to dedicate the rest of my life to helping other people do the same.
Right on. And I started trading a long time ago too. You can tell. No, and also, wrote "Trade Your Way to Freedom," which was a great book. And somebody named Mike Lamoth wrote the forward to my book. So I mean, we're keeping it all in the family here. And I'm coming to you this week from beautiful downtown Meridian, Idaho, where I'm visiting my youngest son and his lovely wife, Sharon, our 2 grandchildren, Lonnie and David. And we're having a ball so far, but we want to make sure that we, jump on the line with you this morning to keep going. Now, next week, just here's an alert. We will not be on, because I will be on an airplane next Monday heading back to Hawaii. But we will then follow up with episode 3, the 7 deadly sins, the following week from there. So, Mike, how about just a recap of what we covered last week would be really good.
All right, sure. Let me see here. So in episode one, we broke down real trader struggles, why traders ignore stop losses, revenge trade, and let emotion sabotage their success. So this week, we plan to take things a step further, where we're exposing 5 common pain points that traders face, and perhaps more importantly, how to fix those.
Okay. And so, do you think, Mike? Let me modify my camera setup here just a second. There we go. That's better. I'll take this one. It's always a lot of fun to work with somebody else's setup on their computer. That's exactly what I'm doing.
Always, yeah. So, like we were saying last week, we exposed the real challenges that traders face, like ignoring stop losses, FOMO, revenge trading, all that kind of stuff. But why do these changes keep on happening? That's
that's a great question. Why do these challenges keep on happening? I know that I'm working very hard to put together a diagnostic for, and it's going to be available in the very near future for traders to just answer a series of 15 questions, and it'll let you know exactly where you land on the spectrum of all the way from a disorganized trader to a trader who's got their stuff together and is just ready to go into the pro ranks. And one of the things we've been digging into, Mike, is why is the disorganized trader the disorganized trader? What are the personality traits that cause that? And a lot of times it's due to something very simple. The folks basically are just getting started.
Mm-hmm.
At the same time, if you've been at it for, let's say, a year or 2 years or maybe longer, and you're still making the baby mistakes, you basically haven't learned to walk yet. It's because you haven't got possibly because you haven't got a great plan put together. And that's what Mike and I offer through our systems, is a great plan that'll help you, take the training wheels off.
Right.
Maybe we should say, stop crawling and start walking.
That's a good one. So the reason why a lot of people tend to stay in that zone where they don't learn how to walk, I think a lot of it has to do with self-diagnosis and misdiagnosing their own set of problems.
Okay.
Right. So what happens so often when people are experiencing FOMO, or they're moving their stop loss at the wrong points, things like that. A lot of times it gets blamed on, it's this system, or it's the market, or it's this, or it's that. And maybe that's part of it. But what often ends up being the case, especially for this particular group, is that they don't have a process in order to know how to move a stop loss, right?
Yeah.
Or what's the appropriate place. So it's done based more off of feeling versus based off of a set of rules or guidelines, or some sort of a systematic way of doing things. And because of this thing that, I moved my stop loss in the wrong way, it must be due to some sort of a fear, right? And so they correctly see that, I've got this fear. Maybe the way to trade better is to be fearless, right? Well,
okay.
Sometimes our emotions are a good thing.
If
I don't know, if I don't have a process and I'm trying to move my stop up and I'm afraid of losing money, well, then those emotions are actually protecting me, because it's letting me know, even though I haven't self-diagnosed myself correctly, it's telling me that, hey, you don't have a process, so you should be scared, because there's a lot of things that you haven't properly prepared for.
Yeah. Well, how much of it do you think it's because when people, one, their initial impression of trading is that it is very easy and simple. It's got to be easy and simple, right? While in reality,
if you have all these 18-year-olds on Instagram and Twitter making millions, how hard could it possibly be?
Oh, yeah, exactly. And at the same time, you think it's that way, but the person, one, doesn't know what they don't know.
That's right.
And so they're literally walking down, they're like taking a stroll down a park, all of a sudden, and it starts to get dark, and they're going, wait a second, it's getting dark. What am I going to do? And that's when the mugger steps out, mugs them, takes all their money. And, and I tell you that story because that's a lot like it is when somebody just first starts trading. They're lollygagging down the road thinking, oh, this is so easy. And guys like you and me are just waiting for them. We're not the muggers, but we have a plan that rewards us when people make mistakes. Have you ever thought about it that way?
In that analogy, I would rather be the person that tells those guys, hey, you know what? Probably don't want to walk down that street because that's a shady part of town. Well, why don't you go over this way and walk with them?
That's very well said. And so you don't want to be like taking from the rich to give to the poor, or something like a Robin Hood or something like that. I'm just
no. That I've heard that analogy too, where there's that it's a zero-sum game. That for every winner, there's a loser. You know, I don't necessarily buy into that. You and
Yeah.
I could trade the exact same system in the exact same way, and that doesn't mean that you have to win and I have to lose,
Right.
right? There's so many players in the game playing in their own way, including the major institutions. They could win playing their game. We could win playing our game. It's just
Exactly.
knowing what and how and why to operate in a certain way.
So yeah, I think what I think that comes back to is having a trading plan that has an edge, and then basically relying on that edge. Excuse me, and recognizing that, for one, is that there is no system out there that has a 100% win rate. As a matter of fact, most successful systems are going to have somewhere between, sometimes they get as low as 35% win rate. And you may be going, oh man, that means I'm losing 70% of the time. But it's the way you manage your money, your position management, and how you take your profits and win. Because if you're trading, like, let's say a 2-to-1 reward risk ratio, then you only have to win like about 45% of the time to have a profitable system. And
and you could do sensational well with the 45% win rate. Though when we interviewed Andrew O'Connell last year, though, didn't he have somewhere in the ballpark of a 45% win rate? And at that time, he was number 1 in the U.S. Investing Championship.
Yes, he did.
Yeah. So you don't need to win every trade. You just need to win more on your winners than you lose on your losers.
Yeah. And the we're going to be transitioning into our first part of the segment 1. We're going to talk about inconsistency and emotional trading. And part of, I think one of the things that you and I do and do very well is we help newer traders establish a sound set of expectations. In other words, you can't expect to win every trade. We need to set expectations of, okay, I set up my reward risk so that for every dollar I risk, I will gain, over the long term, I will gain $2 to $3. And then that's what makes you able to withstand the ups and downs and ebbs and flows of the market. Mike, you put out a really great picture this past week, and it excuse me.
Ted Williams.
The dry air here in Idaho is getting me. But you put out a really good picture, and it showed a picture of Ted Williams. Ted Williams was once the best hitter in the major leagues, for you baseball fans out there. And he had several seasons where his batting average was over 400, right?
Yep.
Which is amazing. But you did a really great graphic, and I don't know if you could share that with somebody right now. But that graphic, you showed the strike zone, and there were certain, and that's where the umpire would call a strike if the ball went all the way to the catcher. But it showed a probability of, getting a base hit or a triple or whatever. And he had he couldn't swing at everything in the complete strike zone, but he had certain areas where he had a higher probability of success. Do you have that? Can you share it?
Yeah. I shared my screen, so that'll pull up the Instagram.
Let's see if do I need to do anything?
You need to add that window to the live stream.
No, there we go. So I got to let you, I think, maybe it's just, add to stage. There we go.
Yeah, so that's it. And this is a pretty famous image too. showing Ted Williams and his batter's box. I just put a chart over it because I think that this really does apply to traders. And well, what pitches should we be swinging at? Well, we should be swinging at the pitches that are in our strike zone, and we should also know the statistics of our strike zone. So, what makes for a high probability pitch? What makes for a high probability trade? We need to have that very well defined. We need to know what it looks like, so that way we know if we're swinging completely off the plate somewhere up here or way down here, or if it's somewhere in the box.
Yeah.
And if it is somewhere in the box, well, what takes a trade from an okay trade to one that's in that real good sweet spot? I believe Ted called it the happy zone. Where's your happy zone? And then spend your time swinging at those. And in trading, we've got a huge advantage because there's no called strikes in trading. He has to deal with 3 strikes and you're out. So just swing at pitches in the happy zone, nothing else, and that'll dramatically help your performance.
Yeah, and I think by it took Ted Williams a long time to develop, his batting prowess. I mean, he was one of, I remember watching him when I was a kid, and he was amazing. I mean, he was really amazing at how well he hit, but pay attention to his averages. He had several years, where his batting average was over 400. Never got up to 500, which, let's translate that. That means 500 would mean he, every other time at bat, he would get a base hit. And so most of these, professional baseball players, if they're batting over 300, that means 3 for 10. They're getting a base hit or a base hit, at least a base hit, 3 out of 10 times to the plate. They get paid a lot of money for that. But it also shows that no matter how skillful we are, there will be times where you have to, you walk away from the plate having struck out more times than you go to first base. And so how do you adopt that into your mindset? And so, hey, keep it simple. Thanks for the comments. Love that. And welcome. And so what's up with you, man?
Yeah, keep it simple. Good to see you.
So yeah, Mike, that is absolutely phenomenal. I love that. And it made so much sense. And so what about, okay, let's dig in a little bit. Why traders can't stay consistent? And I think that I'll just throw out a couple of things that I think is that when they're initially getting started, they don't start from a place of consistency.
Okay. No, how do you mean?
In other words, they look at the water like it's at a lake. They look at the water, it looks really calm. And so they go, hey, I'm going to just dive in head first. And so they do, and they find out that the water was only 1 foot deep. And so they wind up cracking their head on the bottom of the lake, right? Rather than learning how to, what do? You test the water before. So you wade in. You say, oh, okay, yeah, at this point it's 2 feet deep, 3 feet deep, 4 foot deep. Oh, okay. Oh, I'm safe where I could, in fact, dive in. But they make it a learning process. And so part of the thing is improve your knowledge. And how do you do that? You basically start with, I think, reading a book. You can get either your book or my book, or if you really want a double dose of trouble, get both Mike and my book. And that link will be in the descriptions. Both are over on Spotify and on YouTube, and get a copy of this book, because we reveal in there. I mean, I show you my 3 main setups, and I personally believe that in reality, you need no more than 1 main setup to begin with. And so start with developing your list of rules, and maybe you only go with 5 rules to start with. When to enter, when to exit, where to take your stop losses, where to take your profits, and your position sizes. Go with small position sizes where you're first learning. Go with trading, trading the simulation or the paper money accounts, and do that for 6 months until okay. Then all of a sudden you're getting in the groove, and you're starting to basically really understand. Did you realize, Mike, that in Japan they do not let beginning golfers on the golf course?
No, I
Because
didn't know that. Not really a
because
golf guy, but I didn't realize that.
no, they do not let beginning golfers on the golf course because, one, they don't know the rules, they don't know how to swing a club. They basically then hold up the more experienced golfers. They make them go through a training course where they gain proficiency in golf, and you have to earn your way onto the golf course to be able to play the real golf course.
Oh, okay.
And so that means a lot of time on the practice range, a lot of time on the putting green to gain that. And I believe, neither when, like with autopilot trading, is we have a flight path to profits. But what it is, it takes some people like through a flight school on how to get started trading. Because when you're first learning how to fly, like I did with the Navy, they don't turn, sometimes $1 billion jet over to you the day one when you walk onto,
No, you don't just sign up and say, I want to fly one of those. And they say, well, here are the keys. Good luck.
Exactly. But they start you off with something that, if you crash and burn in it, it's not going to be that expensive, for one thing. But they don't even let you close to a real airplane for at least 6 months, because you're doing simulators, you're doing all this kind of stuff. And then when you first start to learn how to fly, you don't fly alone. You fly with a instructor pilot with you, and that keep you from basically, crashing. And then after, so many flights, then you can take your first solo.
Yeah.
And
that sounds like that would be a good requirement to have for traders.
Exactly.
But you could, anybody could just like go up to Robinhood or whoever and open up an account and fund it with your life savings, and off you go.
And well, it reminds me of like, I think Mark Minervini had to say, as you said, that the entry to trading is so wide open. It's too easy to get in. So what about these? Excuse me. So the inconsistency in emotional trader. Why do traders get stuck there?
Yeah, though. Well, like you had said, no system. But for my first 10, like just reflecting on my first 10 years, what got me out of that whole funk was having a risk management portion.
Gotcha.
Right? That was a big thing. Well, when I first started out, even buying the mutual funds, right? Well, when I first started out, I went to local bank. That's where I thought that you bought stocks. They told me, no, you don't want to be trading stocks. You want this. They handed me the mutual funds. So the mutual funds should have been managing the risk, or at least I thought that. Well, 3 years later, down 20%, I realized that they didn't really manage the risk that well. And then after that, I discovered this guy named, I don't know if you heard of this guy. His name is Jim Cramer.
Oh, yeah. Big Jim.
His philosophy is that, you should really study the story of the stock. And, if the story hasn't changed when price drops, then that's an opportunity to buy more. So I followed that and, bought some more. Price dropped from 15 to 14. Oh, that's an opportunity to buy more. Price from 14 to 12, buy some more. Down to like 7 or 8, well, buy some more. And then call into the show. Well, I didn't see the story change. I thought that this was an opportunity. He's like, oh, the story changed on a month ago. I'd sell. Well, how do you know when the story changes?
Yeah.
I would, and that's part of what really turned me on to the strategy that we're using now and learning from O'Neill and Minerini, and because you don't need to know the story, right? The story, the day by day, like the story is being told right on the chart, and that's how you can really manage risk. If you're taking off risk at 7 or 8%, or I like to tighten it up even more. I like to take off. Most of the time, I cut my risk at 5% or even less than that sometimes,
Yeah.
and that keeps me in the game, and that's what's kept me in the game for all this time up until today.
Yeah. And part of on knowing learning how to, I think, let me say this correctly. I think that as a person progresses, they start with their learning about trading, they get to a point and they understand and recognize risk. I think when you first get started, you really don't even recognize risk. I mean, really,
Yeah.
I mean, you don't. It's all the only thing that is recognized is the reward, and that's what makes it sexy, right?
Yeah.
Because I'm gonna get that Lamborghini. I mean, I'm so excited, and the fact of the matter is just failure to recognize the. So the situation I'm looking at is, consistency isn't about finding the right trade, but as you've been hitting on, it's about following the right process every time. And
Right.
so what I've found when it comes to consistency and helping traders reach it, guess what? I oftentimes find, Mike, that they're inconsistent in other areas of their life.
Really?
Yes, they're inconsistent with their physical fitness. They're inconsistent with their spiritual development. They're inconsistent with their relationships and all that type of stuff. And I'm a proponent of, how you do anything is how you do everything. And so part of the thing is learning to be consistent requires the D word, right? Discipline. And so
Absolutely.
the thing that's really cool about it, I think, is if a person really hones in and starts working on discipline, learning how to be a disciplined trader, then let that roll into the rest of your life, and it will actually make you a better person, a better a wife, a better husband, a better a father, a better mother, and just better for society. I'm getting a little bit philosophical here, but that's what I think. That's what I think. That will happen.
Well, I think that you're right. Yeah, well, and when you start to have more awareness, right? It took me a long time to have this kind of awareness of how interconnected things are.
Yeah.
If I'm doing well in one area, that there's certain things that I could take from that area and apply it to another area. For example, with my own physical fitness. Well, way back when, I was the guy that was at the gym with a little notebook and writing down like, okay, I did this many reps for this many sets at this weight, and here was the exercise, and then go to the next one, and I'd have my notebook and my pen, and I would track all that stuff.
Yeah. Yeah.
I never thought about applying any of that to trading, but here we are, and it's very similar in that way. And to be honest with you, this is one of the first times that I thought about that specific example to this.
Oh yeah. Yeah. So, well, it's kind of like James Clear in his book Atomic Habits. He talks about when you're trying to develop new habits, is that basically put together a habit tracker, and the habit tracker may be, hey, I went to the gym today, checking the block. Even if you didn't work out, I went to the gym, and so to basically initiate the habit with a trigger event that gets you up and gets you going. So here's some questions that let's answer these questions that some of the people have asked out there. Is one, Mike, how do I stop jumping between trading strategies?
Okay, so how do I jump? Say that one more time. I'm sorry.
Okay, it's how do I stop jumping between trading
Yeah,
strategies?
it's a great question. If you're finding yourself jumping between trading strategies, I would be curious to hear about well, what's causing you to make those jumps, right? Did you just hear about something else and you're kind of chasing a shiny object? Is it that this strategy stopped working for you? Is it that you're kind of new and you're reading, I don't know, market wizards, and you see how the different wizards are trading in different ways, and you want to go and test them all yourself? Well, what is it that's causing this? And then from there, that gives us a better foundation to start to unravel and diagnose.
Okay, so and so that's I love how you. Um, it's one of the first discussions you and I had a long time ago, years ago. You talked about unpeeling the onion, basically, and diving into multiple levels deep of asking
Right.
yourself, when you're asking, you could be asking yourself, okay, why am I jumping from, between trading strategies? And then once you answer that, you could maybe it's well, I'm jumping between trading strategies because I'm not confident in my ability to execute that particular strategy. Then you ask
Mhm.
yourself, why do you feel like you're incompetent to execute that? And then you answer that question, and you go, and you said at that time, you said dive down at least 3, 4, 5 levels deep, and then you start honing in on what is really the issue that you can
Mhm.
start working on, and then you can start building better, stronger habits to overcome the real root issue.
Right.
Do you still believe that?
I think that it's very useful to dig into your reasons why you're taking different actions. So
Yeah.
that way you could have a better understanding. And if you have a better understanding, you can make a better diagnosis. And if you're able to make a better diagnosis, you're able to offer a better solution.
Okay.
Right? Just like if you were to walk into the doctor's office and you told them that, oh, I've got a pain in my neck. Oh, well, just take these pills.
Yeah. Yeah.
Right, and send you on your way.
Okay.
Versus trying to dig into, well, what happened here?
Yeah. Yeah. No, I agree wholeheartedly with that, because oftentimes what may be needed is not a pill. What may be needed is a stretching or an exercise plan or whatever, which will alleviate the problem and actually make you stronger in the long run. So,
Mhm.
um, is inconsistency a sign? This is another question that came in. Is inconsistency a sign that I should switch my system?
Is inconsistency a sign? Well, it depends. It depends. Are you? Uh, is the inconsistency in the execution, or is the inconsistency in the sample that you're looking at? So let's say that every system will go through streaks, winning streaks, losing streaks.
Right.
So if somebody is looking at a sample of, oh man, I just had 5 losses in a row, I'm thinking of switching here. Maybe they don't have the large enough perspective
Mm,
of the system, and that could just be normal.
okay.
So that's one thing. The other thing would be, are they inconsistent in their execution of the strategy? Like, so are they following their plan? Are they following their rules? If they're following the plan, following the rules, and their results are not there, then maybe it is the system,
Yeah.
and it's worth figuring out. Well, did the system even work in the first place? Right,
That's
like that. Well, when I was trying to just trade like how Kramer trades, that didn't work in the first place, and there was levels of me trying to put my own spin on things on a system that didn't work. So
Yeah.
yeah, that didn't work. The inconsistent results, a good reason for me to switch. Then with O'Neill, all the data that's backed up, all the history. So that system I already know works. So if it's not working, then I know that the problem is me, not the system, and I need to work on myself.
Yeah, right on. And I agree with that. That's one thing that I, uh, totally agree with, because when I was trading, I traded a winning system. Matter of fact, it's the same, more or less the same system I'm trading right now and doing really great with. But I traded that for about 4 years and had crappy returns. Had nothing to do with the system. It had to do with how I applied the system. And so
Mhm.
I had to kind of reverse my focus away from the system to focusing, okay, what's missing in me? Okay, how do, how do I become a more, I had to ask myself the question, how do I become a more disciplined trader? What's working, what's not working, and what have I learned? And then how do I, go to work to fix that? Those 4 questions that I ask. And so in doing that, then, because I think there's always the path of least resistance, and the most painful part of the path is to have a great system that works, but then the weakest link is me and
Mhm.
in my discipline in applying that system. And so that's one of the things that we worked at. So, hey, but if your biggest struggle isn't execution, maybe it's having enough time. And so one of the things that is, what about the lack of structure and time constraints to be trading?
That's important too, right? When I was starting out, well, with O'Neill and trying to trade his way, it did take quite a bit of time to learn and to go and execute. And it was when I finally discovered the New York City IBD meetup that I
Yeah.
got to meet other people that were trading the same system but trading it in their own ways. And so it was from there that I started to figure out, all right, I have the structure in the book, but I don't have to follow it to the way that he was doing it. I could try to find my own a more efficient way to do what he's doing and what the people in the meetup were doing. And then that's what I did. And so I figured out a way of how I could trade this, kind of like how Darvis traded back in the 50s, where I'm
Yeah.
doing most of the work at night on weekends. And during the trading day, I don't really need to pay attention to the market at all.
Yeah.
So that's what worked for me.
Okay. Yeah. And I agree. The aspect of, you know, it's an investment of time. It's an investment of learning to be able to get yourself. And there are going to be time constraints, but I like to ask new traders, okay, what in your current schedule or time, your daily walk is wasted time.
Yeah.
You know, could you invest and schedule an hour to do, educate yourself about investing in the stock market if you didn't watch as much television, or maybe if you didn't spend, we spend about, on average, in excess of 2+ hours on social media.
Really?
Yeah, exactly. What would happen if you turned off your notifications and said, hey, or just say, I'm going to limit the time I look at social media between, let's say, 4 and 5 o'clock in the afternoon, and I'm not going to
Mhm.
look at it other than that? How much time would that free up for you to focus on something that's going to put money in your pocket rather than just the eye candy of social media, or seeing how many,
Absolutely.
or
Absolutely. Right now we're in the season of Lent. Do you know what I gave up?
social media. Ah,
Yeah.
cool.
Yeah.
So
For
that's why you haven't been answering my
and so the
text.
phone goes in the drawer, And the only time that I'm even looking at social media is if I'm posting something, right? Because this is part of our business. But to
Sure.
eliminate the mindless scrolling, because I'll what used to happen to me too. Like I would go and post something, but then I'd see something, and before I know it, like half an hour is gone because I'm scrolling through all the stuff. The algorithm knows well what gets our attention.
Oh gosh, yeah.
So the more that we're able to take that device, put it away, and not look at it all the time, like then it starts to become a tool that can serve us versus us serving it.
Right on, right on. And so, no, yeah, and the thing about it is that's one thing, but have you, if you have a lack of structure and or time constraints, you may need to literally, like I spent a lot of time in construction as a civil engineer, and
Mm,
what I would do is we would go look at a building, and we would have to make up our mind: is the building worth saving, okay, and do a renovation on it, or does it need to be completely torn down and build a new structure on it? And when it comes to trading, I think, initially, you may come to that decision. I need to tear down my structure and start rebuilding, because
mm,
the foundation I built my trading structure on is faulty. It's sand, it's not rock.
mm.
And one of the other things is I need to pay attention to my own habits. Do I have destructive habits that
Yeah.
impact my time constraints? And so one of the ones that I have to fight all the time, even now after 30 years, is going to my phone, and for just the need, I don't know why I do it, even is I'll pick it up, I'll log into my trading account on my phone just to see how things are going. Even
Mm,
though I know I've got my conditional orders in that are all automated, it's going to take care of all my trading, but I still need that fix of going, am I up, am I down type of thing. And they say
yes.
that, checking your P&L during the day is a fast way to make a stupid, emotional, impulsive, compulsive decision that you will regret later. And I can testify that that is the case.
Yeah, so do I. So for me, the uh, part of the solution has been, and what I advise people to do, and this tends to work out pretty well, is to have dedicated blocks of time for when you're going to check the market.
Right
Like
on.
if you plan that out ahead of time, of okay, I need to make a decision at say the close, then
Right.
great. That's when you go and you look at the market. Every other time, it's off. It's off on the phone. It's off on the screen. You don't look at it.
Yeah. Yes. So one of the other questions is how, and here's a couple of questions that came in from people, is how do I create a structured routine when I have a full-time job?
It's a great question to ask.
Well,
Planning ahead.
so
You've got to put. So step one, so you assuming that you have a system, that you have some sort of a methodology, then you want to figure out the timing for yourself.
right.
And how much time do I have to do my research? How much time do I have to draw up plans? How much time do I have to place orders?
Okay.
And then once you figure out your activities that you need to do, and you figure out the amount of time that you need, then you can figure out where to put it into the schedule.
Right on. Right on.
And because you've already just in doing that part alone, you're thinking through the process, and because you've thought through the process, it starts to become structured. It starts to become, well, maybe I need to add this. I actually know that I don't need this part. I don't need that part. I don't need the other part. And you start to become more efficient. Then you could make that block for yourself, put it on the calendar, and have that be sacred time where it's not messed with outside of an emergency.
Right on. Right on.
And sometimes the strategies or our routines need to change a little bit. I'm working with somebody right now. He has a newborn, and his uh, his routine needed to change a little bit because of his new daughter.
Oh yeah, yeah. With and
Yeah,
that
kids throw an incredible curveball into trading.
yeah. Whoops. No, uh, no. I agree wholeheartedly. I like to basically help people. Let's plan 1 hour a week worth. Start with 1 hour a week that you're going to dedicate specifically to trading, and you will be amazed at how much you can put into that 1 hour a week, and have it be on the weekend, but where you can put in your conditional orders, you can do your evaluation, and when you start with that by saying, okay, I only have 1 hour a week. How am I going to make the best of that time? You'll find out, well, if I have 1 hour a week, I'm not going to be able to watch 50 stocks. Let's get real.
Mm,
I'm going to be able to watch maybe 5. Or maybe I will say, I'm not going to watch stocks at all. I'm going to watch the leverage ETFs because they can give
mhm,
a big bang for my buck and my time. And so that's another way to reduce the time constraints. And so then I learn how to just really stay focused for that 1 hour. Put my orders in that have the trigger to get in, and then also if that position, if that is order, that conditional order is filled, I have what I call it one OCO, one cancels other order in that will trigger me out with my profit or trigger me out with my loss, and it's all set. And so and then I'm free. Then I'm free, and who can't find just 1 hour a week? If you can't find 1 hour a week, then one, you're not looking hard enough. And
mm.
there may be the cases where you may be working 11 or 12 hours a week, a day, 7 days a week, and you need to allow time for your family and all that kind of stuff. I get it, but maybe it means getting up an hour early, or maybe it
Mm.
means staying up an hour later on the weekends, but find an hour. And so,
Yeah,
yeah,
very good. That's very helpful, right? Because you've got your dedicated block of time, and then you've got to figure out, well, what needs to be shaved off of here and over there to fit this, and you end up becoming very efficient. Yeah, I like that strategy, Dennis.
well, thank you. And so
Yeah.
let me go. I'm sitting there, I'm using my son's computer and I need to, he's got this really wild mouse thing that I am totally that I'm, so the segment 3, we basically wanted to talk about the fear of losing capital. And, in the time we have left, Mike, is that we'll cover this one and the next 2 after that to hit our 5. But the fear of losing capital, what are some of the things that you could take away? How do I stop being afraid to pull the trigger on trades?
So if you're afraid to pull the trigger on a trade, you need to have a certain level of certainty that this is going to work out, not just on this trade, but over many trades, right? A
Right.
lot of people will understand the concept of, yeah, I'm not going to win every trade, but they need to really understand the stats of the system and how to make it work.
Okay.
If you if you have a losing trade today, tomorrow, the next day, and let's say that you've got 3 losers in a row, and you're like Ted Williams, and you're like, oh, I just struck out, and people start to doubt themselves, they doubt their system, they start to think like, am I even doing this right?
Right.
If you know the stats of the system, then that puts you in a better position. So,
Okay.
for example, with O'Neill's system, it's basically 50-50 win rate, uh, give or take. Sometimes they're a little bit hotter, sometimes they're a little bit colder, but it basically has a 1 to 3 reward to risk. You risk 7%, you stand to make 20 to 25%
Right.
on a winning trade. So by understanding that, you already know that, okay, I could have a string of losers and the winner will make up for it.
Okay.
Then it's understanding, well, what's the appropriate pitch to swing at? if I know what the right pitch to swing at is, then I start to become more confident.
Right. And so,
And
yeah,
so
no,
those are a few things that I think that can help people with a fear of losing, especially like with a fear of losing money too. Like a lot of it comes with like, okay, I'm at the plate and I don't know what to swing at, so let me
yeah,
just swing at anything. And am I going to be thrown out at first base? Well, let me take my money off the table now. Meanwhile, you probably could have stretched some of these trades into a triple or maybe even a home run.
exactly.
Plan,
Yeah.
plan, plan, and don't just make it off there's a term called Monday night quarterbacking. You don't want to do that. Well, what you want to do is have a plan that's already preset before you even enter the trade, where you start to already think through. All right, if this trade gets triggered, I plan on taking profits here, here, and here. Here's how much I'm going to risk. Here's how I'll raise my stop. If the trade starts to go sideways, here's how I'll adjust. I go into trades with all those things, and that's what I teach people how to do as well. When you're well prepared, you're a lot more confident.
Oh, I agree. And that, and part of that preparedness is like when you're first starting out, one needs to limit the things they're tracking. This is my belief that they need to limit the things they're tracking to one, assure that they're protecting capital. So that means basically using stop losses, then having a really good idea of maybe you don't make it complex where you're going to be getting out at 3 different positions on your profit. Maybe initially learn how to be a winner. So what does that mean? Okay, let's say I put together a 2-to-1 reward risk system, or that's my basics. Then go ahead and put the order in. You've got your stop loss, and you'll just take all your profits off the table. At the let's say it's 10%. You want to gain 10%, or maybe it's 5%, and do that and repeat that over and over and over. And what happens is it's like doing reps when you're lifting weights. You don't do reps with the max amount you can lift, right? You do with a lesser weight to build your muscle mass, and then you can later on press the bigger weight, okay, to find out how strong am I really. And think about doing your trading the same way. Is that, hey, I'm going to learn to be a winner first, and winning, and also learn to redefine what winning means. Winning means I executed my system to perfection. In other words, I took my stop loss where I should take my stop loss. I got in where I should get in, and I got out where I should get out. And you measure those things, and that actually takes the vernacular of losing off the table, because I will have trades where I don't make money, or I may lose some money, but if I've followed my system, that's a winning trade. And it's a total mind shift, if you will. And
yeah,
so,
but Dennis, I've been following my system and I've been doing it to the letter, and I'm still a loser. Well, how do you answer that?
It gets back to why. What is your journal telling you? Have you been, are you tracking? Are you really following it to the T? And most of the time, and over what period of time are you still losing? Are you, working at using a system? You've been using it for, let's say, 90 days or even a year. And you have 10 losses in a row. Well, is that within the parameters of your system? In other words, if you have a 50-50 system where where you're expecting a win-loss ratio of 50%, there's a chance you're going to get 10 or more losing trades in a row.
Oh, well, I don't do all that. My system is I just I go on to Twitter and I follow a bunch of people and I see what they post about, and I take their trades, and
Yeah.
they're a lot smarter than I am, so I just take those trades and I hope for the best. And well, when I've got some profit, I sell, right? So I plan to sell at 20% all the time, and I put about half of my account in per trade,
Yeah.
and I have some big gains that way. But the other day I blew up my account. So what advice?
So, well, that's a really great question. What advice would you give somebody like that? Is it is basically I would basically say, let me know when the pain gets high enough where you will listen about how to put together a proper system, and I wouldn't say proper system, but where you learn to put together a system that reflects the appropriate win-loss ratio, your expectations, and will protect your capital. And when you're ready, when your pain is large enough and you're tired of the cycle of death that you're currently in, that then we can talk. We can talk about it. And in the meantime, here, take a look at my book, read it, tell me what you think. Or you may just say, hey, for right now, you should stop trading. Now, what for a while, because you're not at the point of making wise decisions. Because and then you ask them how wise the decision is to basically follow exactly what somebody else is doing when there's a lot of issues with timing. And so it would be it'd be a discussion on, as you said, and you listed a whole bunch of stuff about what they're doing. Each one of them is a weakness in their system. So, basically, how do you help them discover? Ask them the questions that need to be asked so that they can discover the weakness that's in their system and perhaps the weakness in their own mindset for believing that. Why do you believe that this should work?
Yes.
And
there you go. And that's the thing right there. Well, did the system even work in the first place?
Well, exactly. Yeah. Have you back tested this system? And I don't know too many people who actually go back and back test the advice they get off of X or X or or Instagram or YouTube. I don't know how people, I don't think you can really, well, maybe you can back test it. If anybody knows how you can back test the advice you get from Jim Cramer or some of the other gurus out there, please let me know. I think part of the thing, Mike, is bring people back to the truth. And the truth is that trading can be clear and simple process that will allow you to have, a winning, you have a trading edge, and help them understand what a trading edge is. Trading edge doesn't mean you're going to win every time, but you get to a place where you recognize the setup that you have. And so is this a winning edge setup? And if it is, I have to take the trade. Because this reminds me of oftentimes people will, they will pick and choose. Like let's say you put out 10 different entities that you could potentially trade this week, and here's the setup on every one of them. And if you are, like with my system, I'm taking every trade that there's a setup. Okay, if I get filled. But oftentimes members will pick and choose. They go, well, I don't like that one for whatever reason, so I'm not going to take that trade. And so they may take, out of 5 potential trades, they may go, well, I'm going to take one of them. And then they try to compare their results with your results. And let's say out of those 5 setups, I was filled on 3 positions. And so I'm more diversified, and they pick one, and the odds of picking the exact one that is going to do the best, it's kind of like astronomical that you're not going to pick the right one. You got a 1 in 3 chance of picking the right one, and so so in order to get similar results, you have to be willing to take all the same trades. So what about disciplines and execution struggles? That's one thing that I hear consistently. It reminds me of a story. I was helping this lady. She was a psychologist, and she comes to me and she goes, Dennis, she goes, I'm afraid, I'm watching 50 stocks, but I always miss the one that's moving. And I said, well, clearly, your time constraints are you can't follow all 50 stocks because you have a medical practice, a psychology practice you're taking care of, a lot of clients, not going to step. And so why don't we reduce the number of stocks you're actually following? Let's reduce it down to 10. And that way you'll be focused on that. She goes, no, I can't do that. I go, well, why can't you do that? And she goes, because I know that if I'm not watching the full 50, that I'll miss something. And I said, I go, Joyce, you're already missing them already. So don't you think if you reduce the number of entities you're watching, you'll be able to, come closer to be able to take action at the right time? And she just wouldn't do it. And so what happened to her? She wound up, she didn't blow up her account, but she finally just stepped away from trying to trade stocks, and she went and traded mutual funds. And I hope that she had a very, successful life trading mutual funds, but not trading stocks. But people second guess their entries and exits. They overtrade when there's no setup, are not following stop losses, or just some of the discipline and execution struggles that people have. So how do you deal with folks? How do you work with folks who are struggling in those areas?
So asking lots of questions is the first thing to try to understand, well, why are they struggling? Well, why are they moving stops in the wrong way? And to have that kind of foundation. So let's use what was her name? Joyce?
Yeah.
As the example. So
well, her name was changed to protect her identity.
Sure. Good to put that out there. So one of the things that I would start to ask Joyce is, well, why does she feel that she needs to watch all 50 names? Is she trying to trade all 50 names, or is it something like me? Like I have a universe list. There's about 300 stocks on that universe list. That doesn't mean that I'm I'm watching them, but I'm not watching them all day, every day, if that makes sense. That's just my pool to start to whittle down a certain setup, right? And so I'm only going to take action maybe on 2 or 3, right? So I would be curious, if that's part of the thing, if she's trying to trade all 50, or if maybe there's some sort of a trigger to get her into one of those 50 that she could look for. So that way, keep your list, find the trigger that you're looking for, and that specific trigger, maybe there's 2 or 3 of them on a given day. Yeah. And then you know which ones to pay attention to.
Yeah. Or if you're a swing trader, it could be a given day, or if you're a swing trader, it could be a given week, because and that's okay. One of the things that I think that was a big challenge for me when I first started trading is I really had this misconception of false belief, is that I thought that I had to be in a trade all the time. And so I would not give my system the opportunity to breathe, and I would try to force things to happen. That's where I would enter too early, enter too early, and exit too late, oftentimes. But not without a doubt, the aspect of I love the aspect of asking those questions. Um, and I think here, this statement, if somebody could write this down, you may want to write this down, folks, is the best traders aren't necessarily smarter. They just have ironclad discipline. They wait for their setups. They execute their plan. They don't let emotions take over. And I know my mentor used to tell me, he goes, Dennis, it's very simple. You just have to uh, 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 buy when you should buy and sell when you should sell. And that is the answer to one, discipline, but also the answer to running a successful, trading system is buy when you should buy and sell when you should sell.
Yeah, it's great advice. A lot of people hear that and they think that, oh man, that's just so flippant. But if you leave it up to emotions, right? Like if you leave it up to your feelings, well, I feel as though I should be buying here and I feel as though I should be selling there. Like then that's where it becomes very wishy-washy and feelings come and go. But if you buy when you should buy and sell when you should sell based off of a system, based off of a set of rules,
Right.
Then it becomes crystal clear what you should do.
Oh, yeah, without a doubt. And then also, that allows you, when you look back at what you have done, you have the information and data to be able then to say, okay, was I making an emotional decision or was I following my system, which is mechanical? And that mechanical system, then I can evaluate, okay, if I'm following 100% my mechanical system, the wins and losses and all that kind of stuff over a period of time, let's say 100 trades or maybe 200 trades, it should migrate back to what the averages are,
Right.
of that system. It should basically wind up, if you back tested it and it had a 50% win loss ratio and you gain $2.50 for every dollar you risk, you should eventually wind yourself up pretty close to those parameters, right?
Yeah.
So here's some of the common questions in this is one, how can I stop over trading when I know I should wait? How do I stick to my stop loss and stop moving it? I love that. And what's the fastest way to develop trading discipline? Those are three good questions to answer as we transition here.
Yeah, I agree. Great ones for us all to ponder. I'll take a quick stab at something that I can that I would say is, well, what's the fastest way to develop the trading discipline?
Yeah.
Great way to develop trading discipline is to get around other people that are disciplined. I think that's the fastest way to do it. It's just like being in like your environment matters.
Yeah.
Your environment matters. The people that are in your ear matters. The people that what you're watching, reading, what you're listening to, all those things matter. If you're around other people that are disciplined, it'll rub off on you. You'll begin to adopt their habits. You'll begin to compare yourself to them. And you'll begin to see your holes and what they're doing differently.
Yeah.
So the number one fastest path towards becoming disciplined, get around other people that are disciplined, and it'll begin to rub off on you.
Yeah.
That's my.
I love that, Mike. I mean, that absolutely. And then I also like, in developing trade discipline, is self-challenges. Okay. I have to challenge myself to be more disciplined. And then share that with somebody who's around you. Find a group that is disciplined, as you said, can provide you mentoring, which you and I both provide mentoring to folks. But you basically jump in with those who are pursuing a similar path that you are. That way you can build each other up and also uh, not not knock each other down, but build each other up, and then give somebody else permission to hold you accountable.
Mm.
Hold you accountable for, you know, and ask you the hard questions. Well, if you had 10 losses in a row, were you moving your stop loss? Were you, because I think that third question actually takes care of the other two questions is how do I stop over trading when I know I should wait? And how do I stick to my stop loss without moving it? I think that's summed up with what's the fastest way to develop trading discipline is I think that one, write down 5 rules or 6 rules on a piece of paper, and those become the initial skeleton for your trading plan. And you commit to these are the things I'm not going to violate. And it may be stop losses. It may be, for me, it took me a long time to learn that the best time of day for me to trade was during the final hour of the day. If I'm in the market, if I'm watching or looking at the market outside of that final hour, or during the other open session of the market, I have a tendency to want to make emotional decisions, and impulsive decisions. So by saying, nope, this is the only time I'm going to watch, or or after the market is closed, but I will allow myself to make decisions during the final hour of the day. And you may, well, why the final hour? And I'll explain that really quickly. One, during the final hour of the day, you are closest to when the candlesticks and the price action for the day is finished. And so you have a better picture of really what took place during the day. And if you're a candlestick trader like I am, what may have started out to be let's say a hammer for the day at the end of a downtrend, by the end of the day, it may not be a hammer at all. It may finish towards the low. Well, totally different message than if I would have said, oh, look, I have a hammer during the first 15 minutes of trade. I go ahead and make a trade based on that being a hammer. And by the end of the day, it's all the way down to the bottom of its range. I just took a loss that I didn't necessarily have to take, because it's like trying to guess the ending of a movie in the first 10 minutes of watching the movie. It typically doesn't work out, especially with a mystery. And so wait. That's one of the areas where having that discipline just to wait for the final hour, and sometimes it's painful to make myself be disciplined, but the pain of discipline is much easier than the pain of regret. So
yeah, totally agree with you there, and I love that movie analogy. I think I'm gonna steal that one because it's absolutely true. You could watch most of the movie, and you're getting close to the end. You're able to have a good evaluation of, okay, was this a good movie? Yeah, it probably was. Every so often, the ending they'll batch the ending, but most of the time, you've got a good feel of what it's going to be. I love that movie analogy.
So, okay, guys, what we've identified today are some of the major pain points and our challenges that traders have. And if you struggle with those, please leave a comment, leave a review over on the Spotify channel to say, yeah, I struggle with this, or be specific about what you have struggled with. And if Mike and I have helped you today, let us know that also, because we do like to hear from members with how it's impacting their trading. And so next week, no, not next week, the week after next Monday, we'll expose the 7 deadly sins of trading and what keeps traders stuck in bad habits. So let us know which of today's pinpoint pains you struggle with. Remember to subscribe or follow us over on Spotify, on YouTube, on X, so that you can get these live sessions. And also, please recommend us to other traders that are out there if you find value in what we provided. So until then, trade smarter, stay disciplined, and we'll see you next time. Mike, do you have any last and finals?
Stay safe out there, everybody.
So as
Great
we like to
chatting with
say,
you.
even though I'm in Idaho, I will still say aloha and God bless everybody.
God bless.
Okay, let me go find.
Sing us off, Dennis.
I am trying to.